Welcome to the Hughes Optioneering Weekly Workshop, where we scientifically engineer trades for greater profit potential. This is the disclaimer slide. You can pause to read it. We're going to move on. Today we're going to take a look at AMSC, or AMSC Corporation. They don't have that right. It's American Semiconductor Corporation. AMSC specializes in superconductor systems and advanced power electronics for the power grid. Here's the barchart.com technical opinion rating for AMSC. The bar chart rating is an 88% buy with a strengthening short-term outlook and maintaining the current direction. Long-term indicators fully support a continuation of the trend. According to Prime Trade Select rules, a stock is in a bull trend on a monthly basis if the stock price is above the 10-period or 10-month simple moving average. The monthly chart shows that AMSC is above the moving average line, so the monthly trend in AMSC is up. Now we're going to take a look at the daily chart. A stock is in a bull trend on a daily basis if the 50-period or 50-day exponential moving average is above the 100-day exponential moving average. The blue line is the 50-day EMA line, and the green line is the 100-day EMA line. The blue line has been above the green line since the chart started, so the daily trend in AMSC is up. Next, we're going to look at a daily chart that displays the Keltner channel. As a rule, we don't want to buy calls if the stock price is above the upper Keltner channel line. Anywhere inside the Keltner channel or even below the Keltner channel is fine. AMSC is below the upper Keltner channel line, so AMSC is inside the buy zone. I lost my TradeStation account this weekend, so the option chains are different and harder to read. I apologize for the problem. Hopefully I'll get it fixed tomorrow. Meantime, we'll work with what I have. Since the trend is up, we want to buy a call. AMSC has plenty of option chains to choose from. We're going to use the March 21 option chain. Right now, the March 20 options have 39 days to expiration. Here's the AMSC option chain for March 21. AMSC closed at 32.85 on Friday. That means any calls on the list from 15 to 32 are in the money. Let's take a look at the profit potential for purchasing the March 21 33 strike call, which is the closest strike to the current price of the stock. The bid-ask spread for the 33 call is 330 to 360. We try to enter at the midpoint, so we'll use 345 as the buy price. Here's the call option calculator picture for the March 21 33 strike call. According to the 1% rule, we want the call to at least break even if the stock price is up 1%. The calculator picture shows that if the AMSC stock price is up 1% at option expiration, the 33 call will lose 100% of its value. You want that to be at least break even at option expiration, so the 33 call does not meet our requirements. We developed what we call the 1% rule to help us avoid this kind of risk. The 1% rule says to limit the time value portion of the option we buy to 1% of the stock price. That means the stock only has to move up 1% for the call option we purchase to break even and start profiting. Now let's take a look at buying the 28 strike call to see if it qualifies for the 1% rule. Here's the call option calculator picture for the 28 call. According to the 1% rule, we want the call to at least break even if the stock price is up 1%. The calculator picture shows that if the AMSC stock price is up 1%, the 28 call will lose 1.4% of its value. We want that to be break even or better, so the 28 call does not meet our requirements. Let's see if the 23 call will work. The bid-ask spread for the 23 call is 970 to 1160. Sorry about that. Lost my place. We try to enter at the midpoint, so we'll use 1065 as the buy price. Our call option calculator shows that the 23 call works. If the AMSC stock price is up 1%, the 23 call will make a 1.8% or $18 profit. That's better than break even, so the 23 call is the one we'll buy. The call option purchase calculator also shows that if the AMSC stock price increases by 2.5%, the 23 call will make a 6.7% or $67 profit. If the AMSC stock price increases by 5%, the 23 call will make a 14.9% or $149 profit. If the AMSC stock price increases by 7.5%, the 23 call will make a 23.1% or $231 profit. The 10% and 12.5% numbers are also displayed. You can see that the profits get better and better. And notice that if the AMSC stock price does not make the expected move up and remains flat at expiration, the 23 call would only lose minus 1.5% or minus $15 compared to the minus 100% or minus $345 loss for the 33 strike call that we looked at earlier. Now we want to review a call option debit spread, aka a vertical call spread. For this spread, we want to buy to open the AMSC March 21 25 strike call and sell to open the March 21 30 strike call. We're going to base our entry prices on the midpoint between the bid and ask prices. That means we'll buy the 25 call for $8.30 and sell the 30 call for $5. $8.30 minus $5 equals $330. So the entry price or debit cost for the spread is $330. The call option spread analysis calculator picture shows that the spread will make a 55.1% or $170 profit if the AMSC stock price declines by 7.5%, remains flat, or increases in price when the options expire. Creating the debit spread will allow us to collect a $500 cash credit to our brokerage account for the sale of the 30 strike call. As we said on the previous slide, this reduces the cost of entering the spread to $330. Here's a note regarding earnings reports. The next AMSC earnings report is scheduled for May 7. Let's review the trades one more time. The first trade was a call purchase, said to buy to open the AMSC March 21 23 strike call for $10.65. We also reviewed a spread. Spread said to buy to open the AMSC March 21 25 strike call and sell to open the March 21 30 strike call at a debit of $330. That's it for this week's Optioneering Workshop. Thank you for joining us. We look forward to seeing you again next week. Sorry, this one has a couple of odd charts, but as I said, I'm missing my usual data. Thank you for joining us. Good luck and good trading. We look forward to seeing you again next week.